All right, you had
Thanks.
that $75 price target, but you know what? The stock pretty much going to top that probably in the first hour of trading on Wall Street. How bullish are you still on this stock, and have you changed your price target?
Look, we're going to have to revisit the target, obviously, once things shake out here. I'd say, over the next 12 months, we're quite bullish. Lyft is the company with all the momentum in North America. They've been a steady share gainer. We think they're growing considerably faster than Lyft here in the U.S. Longer term, there's certainly questions about profitability, their relevance and their ability to sort of compete in autonomous long term. But near term, we think the momentum in the business and also the supply demand dynamic for shares, Lyft being the first of the kind of gig economy unicorns to come public, we think is going to support the stock.
But what about, I was just talking to our Brian Sazi about some of the risks, the headwinds that Lyft faces. What are those for you?
Well, I think the biggest question is around profitability, as I think he mentioned. When we think about Lyft, at its core, it's really a two-sided marketplace business, and that type of business model can be quite profitable in other sort of end markets of the economy, specifically for kind of the top one or two players. So generally speaking, we think that's a model that can generate healthy adjusted EBITDA margins. In Lyft's case, the biggest headwinds to growth are really the incentives that the headwinds to profitability are the incentives that they're using to attract riders and drivers, and also their investments in autonomous. On the incentive side, what we think is going to be interesting to watch is whether or not the likely IPO of Uber later this year is a catalyst to perhaps some sort of moderation of the competitive intensity on the incentive side of things between the two companies in North America.
How has Lyft been able to differentiate itself? Because it's always seeming to be overshadowed by its much larger rival Uber.
Yeah, well, I think the pitch that they're making to investors is that they really are a pure play around transportation in the U.S. So and really sort of personal transportation. So car-based transportation, scooters and bikes. Lyft isn't focused on autonomous freight or food delivery the way Uber is. They're also primarily focused on the U.S. and Canada, so sort of a North American play. The other area that they're differentiating on, and we'll see if they can sustain this, is really differentiating around brand. So I think the company has sort of deftly been able to maximize the benefit to its own business of some of the kind of the stumbles and brand tarnishing events that have happened at Uber over the last couple of years. So in the eyes of some riders, that Lyft brand is kind of a kinder, gentler version of Uber, has been one of the tailwinds to its market share gains over the last couple of years.